Well, good morning, everyone. Good morning, Sunrise Rotarians.
Good morning.
Good morning.
So if you guys, we'll do like we did last week. I think that worked out well. Everybody just mute your screens and we'll do the pledge together, but so it doesn't give the feedback. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Kevin?
Let's pray together. Our gracious God, I pause this morning, Lord, to thank you for all of our friends who have gathered together on this Zoom meeting. Lord, I thank you for our club, Lord, what it means to us, what it means to our community and literally around the world. Lord, and when we think about the world, we realize again that our world is still in this time of dealing with coronavirus and many other things that we don't understand, that we're not in control of. So Lord, we're reminded of your scripture in Psalm 127 that says, unless the Lord guard the city, the watchman stays awake in vain. Lord, help us to do what we need to do, to take responsibility and be responsible and give us wisdom. But Lord, we realize that there's only a part that you can do. And I invite you to do that. Lord, you see every need represented, Lord, in personal lives, in businesses, in churches. And Lord, I just pray for your touch, for your wisdom, for your presence, for your guidance. Lord, as we talk about, as Lee leads us in a discussion even about money, what an important tool that causes so many things globally to happen and for our club. So Lord, I pray that you just continue to lead us again and give us wisdom. Lord, we've had to make adjustments for even our gala and everything, but Lord, none of that takes you by surprise. So I just pray a blessing upon my friends. Help us today, we pray in Christ's name. Amen.
And then Dr. Johnson, good morning. Would you give us an update on COVID-19, please?
Sure. No major changes from last week. Brady County's number of positive test results are up to 105. That's about maybe 20 more over the last 7 days. There was one more patient hospitalized, but right now there are no positive patients in the hospital, no new deaths. So all in all, I think we are still pretty fortunate in fairly small numbers, although they are growing. I'm sure all of you all followed the Hamilton County numbers, and they've blossomed. And they blossom mostly in specific neighborhoods, but it's just a little bit of makes you think about it. So I don't think any of us ought to let our guard down about social distancing and masking and so forth, although it seems like the bulk of the world isn't paying too much attention. But I do think it's worth being careful, but nothing else major. Okay,
thank you so much. Jim, if you would please introduce our speakers.
Good morning, everyone. The programs we've been doing the last few weeks, we've been trying to get guests who could give us information that's about the community and what's going on. And nothing's been more important than the financial side. It was in the paper the other day that Southern Heritage had lent in several weeks like $30 million to businesses. I think I'm right on that through the SBA. Plus, there are a lot of other things. Banks are, and we're involved in real estate that involves mortgages, which Southern Heritage is involved with, the commercial loans, and also what happens if people fall behind, can't pay the mortgage because they've lost their job or their business was closed for several days. So I asked Lee if we could give us some information on this. He is going to have Tim Poteet, who is president of, I think, the Cleveland area banks for Southern Heritage now. Joy Akins, who is in charge of all the mortgages. And he told me yesterday we're also including Andy Baker, who has been involved in a lot of the commercial loans. And some of you may know all of them. Now, all of us know Lee, who is well known for his sardonic humor and singing ability. So I am going now to turn this over to Lee, and it's all yours and your crew.
Thank you, Jim. Does everybody hear me okay? Okay.
Yes.
All right. For some reason, Jim thought we might want to talk about pandemic banking. It's not very interesting to us. We would like to see it go away, but it's a whole lot like all of you all. We're having to be creative. You know, bankers have always actually been required to have strategic plan that includes a pandemic or disasters of many kinds, and we have plans in place. And we actually spend a couple of days a year working on how would we play out our plan. We have to make some assumptions and make some decisions over all of that. So when the pandemic hit, we did have a plan in place, and it was not a bad plan, but as many of you have experienced, we got a lot of surprises, things we didn't think about, and there was a lot of chance to be creative, as many of you have been. But it was back in mid-March that we closed our lobbies, did all the banking through the drive-through and through the digital products that we have. So we have taught a lot of people who may have rejected the digital options. We've taught a lot of them that it's the only way to go. So many of our older people have gone to the ATM, they've gone to mobile banking, they've gone to remote deposit, where they actually take a picture of the check and send it in to deposit electronically, and they found out that works. Our transactions digitally have really spiked. Our teller transactions have probably have gone down year over year about 12% for the first 4 months of this year. This has been rushed along by the pandemic, of course. So we're kind of wondering, okay, after this is all over, how many of our in lobby transactions are going to actually return? And the regional presidents for our company are all running a little contest on how much we think they will return, and that projection runs anywhere from only 10% will return to up to 90% will return. So I think in Cleveland, Bradley County, our customer base tends to be more senior, and so I think there will be at least 60 or 70% return, but we definitely have taught a lot of people how to do digital banking. As far as our numbers go, April and May have been an excellent months in as far as loan increase and deposit increase. And of course, on the loan side, that was driven a whole lot by the Paycheck Protection Program. And then all the money that we did loan out in that program, of course, went into checking accounts until it's spent. So it hit both sides of our balance sheet, and loans and deposits. And so the numbers are really up. In addition to that, the Treasury sent to most people a nice check, the stimulus check. I think more like $2,400 per couple, I think it is, and plus money for children. So those deposits are slowly coming in. They're not coming in as fast as we can feel the calls of people calling in and saying, "Where's my money? Why haven't y'all giving me my money?" And we're saying, well, as soon as the Treasury releases it, we'll give you access to it. But our calls in our data, our call center have really increased. We had to add more personnel to handle all of that. Most of them are just wanting to know where their stimulus money is. We went through a plan that divided our staff up into two groups. Once the lobbies closed, we had team 1, team 2, and they worked opposite weeks for a little while, just to make sure we didn't, if we had an exposure, we didn't expose our total staff. We made our lenders go to different locations. Some of them worked from home a bit, just trying to keep everybody from being exposed if it did happen. Fortunately, we have not had any exposure to this point. So deposits and loans are up, which is offsetting the fact that the country is experiencing 14% unemployment, and the GDP has shrank by almost 5% in the first quarter, and expected to be, who knows, more like 20% second quarter. But a lot going on. I think the worst for banking is yet to come, because we've had all this positive activity of loans and stimulus. Don't have a clue as to when we'll get a third wave or fourth wave of stimulus. That looks like that's going to be a political ping pong that may take a while. The Paycheck Protection Program is now in the forgiveness mode, where the people who got that money are going to have to apply for forgiveness, and applications are out there, but the rules for forgiveness just keep changing, just like the rules for making the loans changed over a period of weeks. I do have with me Tim Poteet, who is our community bank president for Cleveland, and by that is our senior lending officer. And I'm going to let Tim kind of talk about the payment protection, paycheck protection program a little bit, and how we were involved. I don't know about the $30 million, may not be an accurate number, Jim. He can talk about that. I think that may have been a number that had to do with how many extensions of loans that we did, where we extended payments for people. Tim will talk about that. So I'm going to turn it over to Tim to take just a few minutes. And then Tim, you can, we can open it up for questions for you before we go to Joy and talk about mortgage lending if you want to.
Okay.
But come in here.
All right. Good morning, Sunrise Club. I think this is the first time I've been with you other than your gala. So, but anyway, it's a pleasure to be with you. Lee did provided a very good summation, I think, of what we've been going through. And it's I think as a bank and as bankers, it's been like for the rest of the country and the rest of the world, it's been stressful. There's been a lot of unknowns, and it's been stressful on our customers. It's been stressful on our businesses. And there again, a lot of unknowns. How long does this last? When do we open back up? Before the PPP and the CARES Act was actually passed, one thing we started doing very actively was reaching out to our business customers and seeing how they were impacted. And in particular, the landlords, leases, and retail. I mean, across the board, restaurants. You can almost throw every business in there that's been affected in some way. Most of them negatively through all of this. But anyway, we started reaching out before we ever even got the CARES Act passed, and to see how they were being affected. We had a draft of forbearance agreements for some of the landlords. where they could use that as a guideline to maybe defer their lease payments, because they had quite a few people that were unable to make their regular lease payments. So we started trying to put something together for them. And also for those that needed it, we started making extensions, deferments on their commercial loan payments and business loan payments. And we also started monitoring very closely our past dues, and also when we were being contacted directly by our consumers, the loans outstanding to consumers. It was a little bit harder to reach out to all of our consumer loan customers, but we've tried to be very responsive on our home equity lines and in-house mortgages and commercial loans, business loans, all of those on the front end. And we're still making some deferments to people that are having some difficulty with that. When the PPP actually came in on the first wave, we knew there was going to be quite a rush. And we did everything we could do to gear up and be ready with all of the guidance that was issued by the SBA. And it was pretty slow to be issued in some of those phases. So one thing we didn't want to do was get us in trouble with the lending process, or even maybe more than that, get our customers in trouble with the lending process. So anyway, we definitely stayed on the cautionary side of that and waited on guidance from the SBA before we did various phases into the PPP loans. I know Jim mentioned, and I think he was pulling from Tim had called me, and I think I was quoted in the Cleveland Daily Banner. We actually, bank-wide, First Citizens National Bank, bank-wide, we made over 800 loans totaling over $50 million. We're actually still making PPP loans. There's still some funds there. That has definitely slowed down. But on the front end, the first wave of that was unbelievably stressful for our customers trying to get those funds, and also the lenders that were working on that, and our backroom people that were working on that. One thing we did, Lee kind of relayed, we did get deposits on that in the lending program, because as part of the way we handled the PPP lending program, we wanted to make sure that we could help our customers provide a very detailed audit trail of where those funds were going to be spent. Because as important as anything in the whole process is the forgiveness phase of that, and we are entering into that. The forgiveness phase actually started and starts the day that the funds were appropriated. So if you got funded on a PPP loan today, the next 56 days, how you spend that money out of those funds is going to determine whether that money is forgiven and it's a grant, or whether it's a loan from the SBA that's guaranteed that you repay back through the bank. So SBA still releasing very slowly guidance on that, and like I say, that there is still some funds available, and we're still working with the people that are reaching out to us and needing those. So one thing I do want to, we all worked very hard to try to take care of our customers. That was our number one priority through this whole process. And one thing I think we did very well is we put one of your Sunrise Rotarians in the lead here in East Tennessee, and I think youth and endurance, and I'm not sure how smart he is, but we definitely needed youth and endurance to get us through this process. But Andy Baker really, really stepped up. Andy literally worked 28 days without a day off. And I think most of those were 12, 14 hours a day with a brand new baby in the home. So I think all of us here as Southern Heritage Bank have a great deal of respect. Not that we didn't already, but Andy Baker really, really stepped up through this, and we couldn't have done this without him. Every loan that came through East Tennessee, Hamilton, and Bradley County, Andy Baker looked at. He had to sign off on that the paperwork was correct on every single one of those. And like I say, I don't know how he could have done a better job. He's actually in the lead as far as monitoring the forgiveness phase of the PPP lending process. And we're just taking it a day at a time. So anyway.
Thank you, Tim. Actually, Congress is taking up today more discussion about changing forgiveness, expanding forgiveness. So we still don't know all the rules. So it's going to be interesting to see what comes out of that. Andy Baker is here, and he is our paycheck protection expert. Let's stop right here and see if anybody has any questions about that program or what went on or what's fixing to go on. Anybody have any questions regarding that?
I have a question.
Sure.
This is Caitlin with the Cleveland Daily Banner. I wanted to ask, and you mentioned that there are certain ways that PPP program funding can be used in order for it to become a grant rather than a repayable loan. Can you just briefly go over some of those uses that people who have received that loan can and should use them for in order for it to be forgivable?
Yes, Andy, take that.
Thank you. Hi, Caitlin. Yeah, great question. And like Lee and Tim have both alluded to, they're still rolling out the exact details on forgiveness. Actually, to this day, we're still calling it an interim final rule. So hopefully in the upcoming weeks, it looks like every Friday they're updating that. So hopefully we'll have a final rule in the not so distant future. But from what the guidelines that have been released by the SBA so far stated, you need 75% of the funds used towards actual payroll costs, money going to the employees into their accounts. The other 25% can be used for other costs, utilities, telephone, things of that nature. And the SBA recently also updated the documentation to let us know that while what Tim said was correct, it's 56 days is the calculated period. There was no clarification early on as to when that period started. So as of today, you can either use when the funds were deposited into the customer's account when they received the PPP funds, or you can go from their first payroll during that 8-week period, and they will allow that to lag beyond 8 weeks in order to make sure your payroll agencies can calculate that a little bit more easily and not have to just do it 56 days from the date of deposit if their payroll didn't fall on that date. So we call it a 75-25 rule, 75% towards payroll, 25% towards other services, utilities, things of that nature, mortgage interest, not principal, just interest, and then other utilities. One thing I do want to highlight is what Lee just said, though, that some of that may change. Today, actually, the House and the Senate are both going through, I think, 3 separate bills right now proposing that they extend that 8-week period to, one says 16 weeks. I believe another one says 24. They're also talking about possibly expanding that 75-25 rule to a different ratio, if you will, to where businesses such as restaurants may be able to use more funds than what was originally allotted for payroll. Since so many of the restaurants were already closed, it's hard to pay the waiters and waitresses when you can't allow customers to come in and be served. So that's kind of what we're working with right now, but it's a little bit open-ended still, but we're getting closer and closer to having some final answers, and hopefully in coming weeks we'll have that.
Anything else there?
Thank you.
We have the third wave that Congress has been talking about, and yet according to what you're telling us locally, that there's still money available from previous packages. So I was just curious what your thoughts were about for a third wave. And also, do you have any other data how our local situation compares to the nation?
Well, Andy?
Well, I was going to start off by saying, yes, we have, as of last week, May 23rd, there's about 138 billion remaining in the funds. And Tim mentioned it earlier, but the first wave ran out in 13 days. And I believe that a lot of that was due to the loan size being higher. So there's an estimate would be over 100 billion remaining, unless there was a big wave of loans that came through in the last 7 days here. And Congress today is set to let this sunset at the end of June based on what was released last week. We'll just have to see how fast those funds run out. As far as locally, I can't speak to that. I don't have those numbers.
Well, in Tennessee, there was over $8 billion distributed throughout the state. I don't know that I have the Bradley County number. We did in
Bradley County, we had 9.7 million and a little over
90 loans and 9.7 million that went out in Bradley County from here. I think it was pretty typical. I think we got our share, you would say, but I don't know how to compare it otherwise. The first wave went so very quickly. The second wave did not, and I think that had a lot to do with the good faith statement that Congress added to the second wave to say, okay, businesses, you qualify for this money if you don't have any other access to capital, meaning lines of credit that you already had established or cash on your balance sheet. So I think there was a pause a bit from businesses during the second wave to say, okay, maybe we don't want to take this because it might not all be forgivable. So it slowed down in the second wave, and I think that's why there's still money available. In fact, some of the money that went out in the first wave came back because of that good faith statement. And so money available actually went up over the last couple of weeks because more was coming back in to the SBA than was going out. It was really an interesting phenomenon there. It's like the conscience kicked in.
Do you have any sense for the community or at your base of how many of the really small businesses, might be one or two people or 3 or 4 or 5, were able to get loans or still waiting or anything like that?
Yeah, I don't think there's anybody still waiting. There were an awful lot of very small businesses that got money, Jim, yes. There was no restriction on size other than less than 500 employees. So that was the only restriction as to size. So there were some very small businesses and some single and 1 or 2 people, mom and pop type companies that got money.
I had a question on that. We've never been able to establish for us, we pay ourselves as independent contractors, not salaried, and we've never gotten an answer as to whether we would qualify.
You do.
Yeah,
Andy?
yeah, absolutely. And I'll just say that part of the problem with what you brought up there is that in the interim final rule, first 3 or 4 pages, they outlined it as if companies that hired independent contractors to work with them could actually file on behalf of those individuals. And then about, I'd say 10 pages later in the same guidance, they basically prohibited it, said no, that they could not be included in your payroll cost. So in your case there, you can file under a 1099 independently, and they'll base it off of that. And then 2019's numbers, 2018's tax returns also included. But the one thing that we do have to reiterate today is that your income in 2019 cannot be, 2020 numbers cannot be higher than 2019 on the 1099s. They don't want to see you paid more than what you had last year. And my personal sneaking suspicion is that that's going to be related to how they can document forgiveness going forward, what documents they can use in your situation. So to answer your question, yes, you can file. You just file based on your 1099.
Joyce, I would suggest you take your tax return to your banker, commercial banker, and let him tell you what he thinks you can do. And Andy would be glad to help you with that if you want.
Thank you, Lee. Thank you to Andy.
Absolutely.
I'm still there. Is Tim
Yeah.
still-
Any other questions?
I have a comment for Tim if he's still there.
Oh, yeah, he's here.
Congratulations on that son of yours getting his doctorate.
Thank you very much.
Yeah, he's all puffed up about that, as he should be. Before we close out, I wanted to get Joy Akins in here. Joy is Senior Vice President, head of our mortgage lending area. She started this mortgage lending area, has developed it into what I believe it to be the leading mortgage producer in the county. So Joy, come tell us what's going on with mortgage.
Good morning.
Good morning.
Thank you for having us. Let me first kind of say that, clarify the types of mortgages that I'm going to be talking about and answer any questions for you. Our department does secondary market mortgages, and that's not your, as you might say, that as compared to an in-house loan. So secondary market mortgages is what we do in our department, which is the longer term, those low rate loans that everybody's hearing about now, the 30-year fixed, 15-year fixed. During this pandemic, it's not a whole lot changed for us because we had already been doing a ton of internet applications, doing a lot of our applications by email, over the phone, but our internet applications had just already spiked, right, really in the years before this. So we were already utilizing that technology, and that just helped us during this pandemic that we didn't have to change a lot of what we were doing. We just didn't have the drop-ins and the walk-ins into the bank inquiring about a mortgage, that we had to kind of switch gears on that. Now that the bank lobby is open, not a lot has changed. We're still doing the internet applications over the phone. We are still kind of discouraging people from coming in when we can do it these other ways, just to keep them from being, if they are frustrated with the questions that they're asked about their travel and having to don a mask when they come in, which we are obviously practicing our due diligence here at the bank. But we're doing lots of refinances with the rates being low. We're doing a ton of purchases, which is shocking to me when I see the numbers every week that ticks by. But we've been blessed with a huge customer base, huge referral base that has enabled us to keep almost record-setting volume that we're having right now. But as I mentioned, the rates are very attractive. It's frowned upon for me to specify rates because then you have to quote all kinds of APRs and everything, but the rates are extremely good right now. I mentioned the secondary market loans. One thing that I feel like Southern Heritage Bank, Lee mentioned that he thinks we have the best team out there. One thing that makes us stand heads above all is everything, every function of that process is in-house. We have our own originators right here in-house, processors, underwriter, and closing coordinators. Nothing is farmed out. It's all handled right here in-house. During this time, this heavy business time, we're still able to keep our processing time about 30 days. 30 to 32 days is what we're running right now, which is amazing that we're able to keep up like that. Most of the products, I'll speak very quickly on, most of our products are still available. That has been tweaked with this pandemic because of, it just speaks to the nervousness of the investors that we sell our loans to, and the market itself, Freddie Mac, Fannie Mae, and they have tweaked many things about these products, requiring higher credit scores to qualify for these loans, at least temporarily. I think that will come back down, but stricter debt to income ratios, jumbo loan restrictions, that's any loan over $510,400 falls into the category of a jumbo loan. It's hard to get a jumbo loan right now. So those are things that we think will come back, will loosen back up. We saw this similar thing happen in 08, 09. So, and that eventually settled back down and was able to get back to what is more of a normal thing. But again, I'll open it up to questions, but we consider ourselves very fortunate to have been able to continue with the volume, continue working, to be an essential company, continue working, and on top of that, continue with huge volume. One other thing, Lee, if I can speak to it, everybody's probably heard of forbearance on your mortgage loan. Like if you have a mortgage now, and you can call that lender, and almost without fail, they're going to approve you to skip 2 or 3 payments. And there was not any guidance to these customers to start with, and this happens outside of us seeing it. But those customers, there are some ramifications for seeking a forbearance of your mortgage. It probably will not affect you unless you are looking to get another mortgage in the near future. But if you got a forbearance, but you continue to make your payments, you just had it in your back pocket as just in case, then nothing happens as long as you've kept making your payments. But if you requested a forbearance and decided, I'm not going to make my payments for 2 or 3 months, then when you come back into the market to borrow money on these secondary market loans, you will have to have a waiting period of being back on track, making your payments. And that's being tweaked now. It started out as 6 months back on. So that's forever being tweaked. But I did want to just mention that because I think it's very interesting, because that's being talked about a lot in the market. And I'll turn it back over to Lee, or any questions you have.
Does anybody have any questions for Joy?
I do, Joy. Thank you for showing up and being so nice looking today. Unlike your compatriots there.
Are you saying that's better than what you had, or what?
I've known Joy a long time. All right, on the forbearance, if someone does take a forbearance, the interest keeps building, right? So they're going to probably need a little bit longer to pay the loan off if they make regular payments.
That is correct. That interest payment and principal kicks off to the end of the mortgage. So if you had a 360 month mortgage, it's 363 month mortgage.
Does it affect your credit rating per se to do the forbearance?
Good question. No, it does not. Nothing will be reported on your credit report, but it will, when we pull someone's credit and they have been approved for a forbearance, if there is a footnote that they are in forbearance. And whether they've kept making the payment or not, then we have to follow along behind and make sure that, did you keep making your payment or not? So it doesn't hurt your credit, but it is a footnote on your mortgage that you have chosen to apply for that forbearance.
I have a question. If you chose to do the forbearance and decided after it was approved not to and went ahead and made your payment and everything, does that have any effect on anything?
It doesn't. If you went to a lender and they were trying to do a mortgage for you, again, it would show up on your credit report that you had applied and were approved for the forbearance. But then we would have to get proof from you that you had kept making your payments. And it's as simple as that. Just your history on that mortgage showing that you continue to make the payment, and that there's no ramifications at all if you do that.
Anybody else? I think as far as the outlook goes, as I said before, I think the real concern time is coming up. We do all this stimulus, we do the forbearance on the mortgage, we do extensions on the commercial side. Those are going to work great as long as we get back to work this summer or early fall. If it goes longer than that, how much can we stand? How much can we extend commercial deals? How many of our borrowers can get back to business after they've shut down for a while? It's really unnerving for us. We're monitoring our commercial customers as closely as possible, trying to help them where we can. It's just a question of how long does this last and how much can we do? So I think as far as reopening, my personal opinion is we're doing a good job. We're looking for a balance between getting the economy back open and yet protecting ourselves health-wise. I think that's what everybody wants, and that we slowly get it back going and not wait too long to get it back going. But it's scary. So a lot of uncertainty to come. We're going to have to be more creative, I think, than we've already been. Anybody got any other thoughts or questions before we conclude?
I mean, Lee, can you like when you've given out these the PPPs, I guess.
Oh, okay.
Is that going to? Do you anticipate that continuing, or do you think that the largest wave of this is over? Is there any? Do you have any foresight, like into the future of what the economic impact in our local community would be? Because it seems to me, just as an observer, that most of the community kept working. It's like all the factory jobs never slowed down. A lot of the jobs that are minimum wage jobs never stopped. And that seems to be a large part of our local community. So as somebody who has a catbird seat, like, where would we see this impacting in Bradley County first? How do you anticipate it playing out? I guess those are my questions.
Yeah, I've got some excellent inaccurate forecasts. I think locally we've been very blessed, and I think you're right. I think most of it has continued. A lot of our service industry, though, had to cut back completely for a little while. They're coming back slowly, and now they're at 50% maybe. And so if that comes back at a reasonable time, we're going to be okay. But I think nationally it's a little different. If you go to TJ Maxx, my wife drug me there a couple of days ago, and you look at the shelves and they're empty. A lot of them are empty. That tells me somewhere along the process line, either manufacturing or distribution, the process has stopped. So, I don't know. I have no way of being accurate in a forecast other than to say, I think we're on the right track, coming back slowly. We just need to get there as soon as our health conditions allow it to get there. But without, as Dr. Johnson has told us, that you know, we need some medicine and some vaccines and to get beyond this thing. That's what it's going to take. I know I didn't answer your question, but I admit I can't answer it.
Before we finish up, first of all, I would like to thank Jerry Shannon, who helped set all this up. He called Lee and got all this done as far as doing all the Zoom with it and everything. And if there are more questions, that's fine. I wanted to throw the compliment to Jerry in there, though.
Yeah, thank you, Jerry. You got me through Zoom, but don't even try with Facebook, Instagram, or Twitter, okay? I'm not going there.
That's phase 2.
No. Thank y'all for letting us do this. Jim, I apologize for being so boring.
Hey, Lee, can I give you an explanation of why there's no merchandise at TJ Maxx?
Yeah.
We stopped buying from China.
Hey, that's a good thing. That's one of the biggest things comes out of this whole thing is our dependence on China is of
Yes.
most concern. Yeah.
Yes.
So maybe we can start manufacturing those things that we sell in TJ Maxx in the U.S. and so.
Here. I'm all for isolationism.
Yes.
Let's get rid of them.
Well, we need each other, but it doesn't need to be to the extreme that we was dependent on them to sell the merchandise at this cheap price.
Especially our medicines.
Mm-hmm.
Well, thank you so much, Lee, and thank you to Tim and Joy too. This has been a good program. We really appreciate you guys.
Very good.
Hey,
Yes,
Mary,
yes,
is
ma'am.
Lee going to sing a song before we end the meeting today?
Lee, will you engage us with a song?
Sure, I'll sing really loud and I'll put it on mute.
Hey, y'all have heard about the man that had a song in his heart but a frog in his throat?
Yes.
There you go.
Hey, Lee, can I ask us one more question? Just like, what are the economic indicators that you look to so that we'll know if locally we're on track or not? Or am I asking the wrong person? Maybe that's a question for the Chamber of Commerce or something.
Yeah, you're asking the wrong person. No, I mean, you know, the real local economic indicators I watch are the past dues on the loans. Ours particularly, but you know, we get industry averages and industry looks at that. So far, we're in good shape. But that's what I'm concerned about this summer.
It seems, I mean, has there been any slowdown in construction? It seems just like driving around town. It's amazing to me how you just, I mean, it seems like it's going, not just going, but bigger and booming, bigger than it was this time last year. I mean, is that rational, or is that accurate, or is it just me looking at cranes, you know?
Well, I think you're right. And locally, there's a lot of developers still want to develop subdivisions. We have, I would say, scaled back and taking a more judicious look at those kind of requests to loans to develop. But it has not slowed down. Construction loans are very active. And as Joy said, her business hadn't slowed down at all. She's on target to have a record year for mortgage loans. So, you know, she ends up doing, you know, $70, $80 million in loans last year. Will probably do that many this year if things keep going. But I think it's wise to keep a good eye on that. But right now, developers still want to take that risk And if they can bring the bankers along to go with them on that risk, it'll be as active this year as it was last year.
But that's a completely residential, right? I mean, those are all residential loans.
Yeah.
Okay. Is that because inventory? I mean, I keep hearing from real estate people like Mary Norton and Jim
Yeah.
that we've got such a low inventory. Is that?
Yeah, I think that's true. I think there is a low inventory. Rates are low, and people should be buying in this environment, but there's not a lot of inventory. And that's why we have to still consider development loans and construction loans, because there is a demand. People can keep their jobs and keep their income. That's the danger is who is really going to be affected, who can get back to work. And but I think, to date locally, it's been pretty much the restaurant waiters, waitresses, those kind of jobs that have been affected. We haven't had a whole lot of layoffs locally that I've seen.
I can make one comment. This is from Chattanooga, but in April, sales were down in residential 17%, but because of low inventory, the prices raised, and the average price, now this will go down over the next few months probably, the average price in Chattanooga was $270,000 according to the paper.
Do we have any more questions? We'll wrap it up here.
Gotta go to the next one. See y'all.
Thank you. We'll conclude with the four-way test. Of the things we think, say, or do, is it the truth? Is it fair to all concerned? Will it build goodwill and better friendships? Will it be beneficial to all concerned? Y'all go out and have a great day.